Economics. Dr. Paul Craig Roberts, a former official in Ronald Reagan's Treasury Department and author of a new ebook, The Failure of Laissez-Faire Capitalism and Economic Dissolution of the West. Dr. Roberts, welcome back to the KEISER Report.
Thank you, Max.
All right, Dr. Roberts, gold fell violently in price despite it being in backwardation, a sign that physical markets are tight. Your thoughts on what has happened in gold recently?
Well, I think that the Fed is driving gold down to protect its quantitative easing policy, because when you create 1,000 billion new dollars each year, but the demand for dollars is not growing, in fact, more and more countries are no longer using it to settle their international payments, you get a huge difference between supply and demand. And so the Fed's quantitative easing threatens the dollar exchange rate. And a strong gold price is an indication that the dollar's exchange rate is untenable. So to protect the dollar from the effects of quantitative easing, the Fed periodically attacks it by loosing its bullion banks in the paper gold market with massive shorts.
The logic here seems like something out of a Dr. Seuss book, because the Federal Reserve recently said that because the price of gold is down, they can then ease and print more money and they can introduce more quantitative easing. However, we know that the price of gold went down recently because the Fed and its cohorts on Wall Street shattered the price with naked short sales or Fed printing of more money or counterfeiting. Then that, in fact, increased their net supply of debt. It increased the amount of money in the system, in the shadow banking system. But then they used that as justification to print more money to presumably help these insolvent banks. So still at this late stage of the game, even though the insolvent banks have proven to be money launderers, laundering money for terrorists, funding terrorism, funding Mexican drug cartels, rigging LIBOR, rigging gold, involved in mis-selling, involved in criminal activity, JP Morgan, Goldman Sachs, Barclays, HSBC. The Fed still protects them. It's still a protection racket. Your thoughts?
Well, that's right. But the crooks run the Fed, don't they? And they run the Treasury. It's the same executives who caused the financial crisis that run the Treasury, the regulatory agencies, and the Fed, of course, is their protege.
Dr. Roberts, just prior to the smash in gold prices by naked short selling, illegal short selling, the Fed accidentally released minutes which signaled a major change of policy. The minutes suggest the Fed may possibly wind down quantitative easing. What do you think of this, Dr. Roberts?
I don't see how they can do it, because if they do unwind it, what happens? What finances the $1 trillion federal budget deficit? And if they do unwind it, what supports the bond prices? The whole reason for quantitative easing is to drive up the prices of the debt-related derivatives on the banks' too big to fail books. And so they're trapped. If they stop quantitative easing and they're not supporting bond prices, then interest rates will rise, and the solvency of the banks will worsen, because the prices of the assets on the bank's books will decline. And of course, if interest rates rise, then the bond market collapses, the stock market collapses. So I don't believe a word about them unwinding quantitative easing. I don't know how they'll get out of it.
Now, I'm not exactly clear on the dates, but were you in the Reagan administration during the Plaza Accord? Because I believe that was the last time international country, got together internationally to reset global exchange rates after the kind of the post-Bretton Woods era. The Plaza Accord came in the mid-'80s. They had to readjust the parameters on the global forex trading and the currency grid. I think that was the last major time they did that. So here's my statement. There's not going to be an unwinding of quantitative easing, but there will be some new international conference to figure out how to readjust the global currency grid in one fell swoop. Your thoughts?
I think the Plaza Accord was during Reagan's second term, and Jim Baker had been moved from the chief of staff of the White House to the Treasury, and that was after my time. I don't know if there'll be another agreement. I think what's happening is individual countries are making their own agreements to simply avoid the use of dollar as international payment. You know, the BRICS are making an agreement to settle their trade in their own currencies. Recently, it was announced that Australia has made this agreement with China. They're not going to convert their currencies into dollars and back out. Japan and China are working on the same kind of agreement. So it looks to me more like a move away from the use of a reserve currency, at least for countries whose currencies are stable, certainly more stable than the dollar. So I don't know that there will be another agreement, and don't quite see how they can have a real agreement when both the Federal Reserve, the Bank of Japan, and apparently also the European Central Bank are committed to printing money in order to achieve various kinds of bailout schemes.
Now, I don't know if you saw this or not, but just before the smash in gold coordinated by central banks, the price of gold in yen had actually hit a 40-year high. So here you had massive money printing in Japan, a new 40-year high in gold, and that was tipping people's hand that this money printing policy was in fact potentially hyperinflationary. I don't know if you saw that particular action on the markets, if you could comment on that. And secondarily, this accidental release of Fed minutes to insiders. We've seen, and also, we also understand that the rule, the Stock Act, Stop Trading on Insider Knowledge Act between Washington and Wall Street has expired, so that in fact traders and congressmen can trade on inside information. You were in Washington. They're openly releasing data ahead of market moving points, and they're trading on it, and they're just stealing money from the population. Isn't this kind of a new high watermark for corruption in America?
Well, I think the United States government now is probably among the most corrupt in the world, if not the most corrupt. Literally everything that is said is a lie, not just about economic policy and Federal Reserve policy, but about everything. Wars and foreign policy.
The recent league table that describes the countries around the world in terms of corruption, America is no longer in the top 20 in terms of the least corrupt. They are dropping precipitously down that scale. They're becoming one of the most corrupt countries in the world. And this Bernanke and the Fed in Washington are demonstrating exactly what it's like. Basically, Argentina, we saw during their collapse, America seems to be mimicking that pretty closely. Now, let's turn to your book for a second, The Failure of Laissez-Faire Capitalism. Explain how and why it has failed.
First, let me just run through the book, because the failure of laissez-faire is just a part of it. The book's in three parts, and what the first part does is it examines failures in economic theory, problems in economic theory, such as the economists who confused labor arbitrage with free trade and sat and cheered while the middle-class jobs were moved out of the country, leaving us with a huge trade deficit with a devastated middle class. So the first part deals with those kinds of problems. The second part shows what has happened to the American labor force. It, in effect, has been turned into a third world labor force, where the only available jobs are in lowly paid domestic services, so that the effect of the new economy is to have an undeveloped third world economy. And the third part deals with the current so-called sovereign debt crisis in Europe, and shows that it's being used to establish two things. One, that the public must bear the cost of mistakes made by private banks. And the other use of the so-called crisis is to take away the sovereignty of the individual countries by turning their budget and tax policy over to the EU. So that's what the book does. It walks you through basically the failure of economics, the failure of all of the apologists for the failed policies. Now, what happened with, why did I use the failure of laissez-faire capitalism? Well, if you look back over the last quarter of a century, it's been a century of massive deregulation and massive privatization. You know, Thatcher privatized England, deregulated, so did the French. And of course here it was extraordinary, particularly in the financial arena. They simply totally deregulated American finance, but they repealed the Glass-Steagall Act so that commercial banking is now lumped together with investment banking. They took the position limits off of speculators, so speculators can now dominate commodity markets. They got rid of constraints on debt leverage. And what happened? We didn't get libertarian nirvana. We got crony capitalism. They forgot that private power it can be just as abusive as public power. And
now, while this is going on, Dr. Roberts, the stock market's hitting new all-time highs, and of course, the majority of the media would point to that as proof of success. What are they getting wrong?
Yes, well, it's rigged too, isn't it? At least now. What do the banks do with all the money that the Fed funnels into them? They buy stock futures. Look, how can you have the stock market at all-time high when consumer incomes are declining, when the labor force participation rate is collapsing because there are no jobs, when retail sales are declining? What is the basis for this market? And we've had these amazing collapses. You know, we had the one at the beginning of this century, we had the one in '08, and there's one now pending. It's just a question of what sets it off.
All right, well, we're going to have to leave it there. Dr. Paul Craig Roberts,